it's moving from direct oversight to independent insurance regulators. One is just effects of political meddling. Over time, we have found that lack of independence in oversight has always resulted in financial crisis because governments will always respond it may be the best way, but sometimes it doesn't work for the industry because they are more answerable to the people than the industry. So in many of the world's recent financial crises, politicians and policymakers tended to intervene in the work of regulators, but it didn't work out. And then secondly, governments have looked around to see similar jurisdictions, what is happening there. You look across your neighbor, you find they have a regulatory agency, and it's really contributing to the growth of the insurance industry. So they tend to benchmark and decide, I think that's the way we should be going. What would you be looking as one of the key characteristics of an independent agency? One of the key issues you need to look at is regulatory independence. Does the regulator have autonomy in setting rules and regulations? So does he have to call somewhere before he sets the rules? Supervisory. Is he able to supervise the sector without fear or favor? And then institutional independence. Does he have autonomy to hire staff? Does your regulator have security of tenure? And then budgetary independence. Does the regulator rely on his internal budget? Most of the regulatory agencies have come up with industry fees to fund them as a way of ensuring that you don't have to go to parliament every other time to ask for money so that you can work on that. Countries of the region which have moved from the central bank oversight. Currently, Ethiopia, Rwanda, and Malawi are the few countries in this region which still use central bank oversight. But most of the countries, including Kenya, Uganda, Tanzania, Zambia, Zimbabwe, DR Congo recently, which didn't have a regulator 2 years ago, have brought in ACA. Burundi is also using ACA. So you can see a lot of people now are moving to the independent side, and there must be a reason why. And then the history of Kenya. Kenya, before 1984, they didn't have a regulation. We had a lot of issues, especially with insurance company collapses. As a reactive method, the government formed the Office of the Commission of Insurance. He was supposed to provide oversight, but it was a department in the Ministry of Finance. And it didn't work out. On average, you used to get an insurance company collapse every 3 years. So in 2006, the country decided to create an independent regulatory agency. It's called IRA, Insurance Regulatory Authority. What happens since then, I think we've just, in the 17 years, only 2 company collapses. But one of the key areas that regulator has really helped is in the area of regulations and guidelines. They have come up with corporate guidelines, corporate governance guidelines. Life and general insurance have been separated. Establishment of a policyholders pensions fund, localization of life and marine business, guidelines to help bank assurance, takaful and insurance. Right now they are working on the digital method, on the digital distribution method, and they have even established an insurance fraud investigation unit. A very good example is what has happened in Kenya from the time when they moved from government directed. You've seen a lot of positives attaching to the regulatory sector because the regulator has become more proactive and brought in a lot of policies that are meant to help the insurance sector grow.